Despite an OMO maturity of 24 billion naira, the Treasury Bills secondary market opened the week with mixed sentiments. But traders at Axis Bank say they expect cautious trading to continue today amid liquidity challenges. Uzor Anakebe, FX trader at Axis Bank, joins me to bring us up to speed on market trading at midweek. Thank you so much, Uzor, for taking the time out to join us. Let's start with you bringing us up to speed on market action today.
Thank you for having me. My name is Uzor. So we saw yesterday when the market opened at 132 billion naira. This is against last week when we saw the market closing at 272. So we saw thin liquidity in the market as a result of the CBN retail SMS debit last week. However, the liquidity was improved during the trading session yesterday when the OMO maturity of about 23 billion hit the system yesterday. However, traders in the Treasury Bill markets continue to expose their bid. However, most traders were trading cautiously. Consequently, at the end of close of business yesterday, we saw the opening rate and closing rates remain largely unchanged. And we expect this trend to continue going forward during the week as the thin liquidity in the market persists. Furthermore, we saw a similar trend in the bond market, continuing from the levels the sentiment last week, where most traders are trading cautiously, and we expect this sentiment to continue. However, towards the close of business yesterday, we saw some minimal activities in some of the offers, such as the 2035, 36, and 2042 trades, where the 2035 was around 12.3%, 2036 was around 12.9%, 12.6%, while the 42 was 12.9%. However, most trades were within the 25 pips bid and offer spread, which shows that most market participants are trading cautiously as we anticipate the OMO auction. Hopefully that will be done this week. On the FX side, we saw CBN come into the market yesterday to intervene. They provided funds for SME and invisible transactions. They also provided funds for foreign portfolio investors. Consequently, we saw the I&E close at 417, an appreciation of 50 kobo day on day. We also saw NAFEX also gain to close at 416.8 in the market yesterday.
And I know you mentioned some specific maturities at the bond market, the 2035, I believe the 2042. I was going to ask you which of the bond maturities across the yield curve today are seeing the most interest from investors.
Yeah, so today the market is largely quiet today. However, the mid maturities, we see some slight activities in the mid maturities, but however, this is not very attractive as we expect we expect a bond auction next week. So most of these maturities are trading with mixed sentiments. However, we see few bids and offer spread across these mid-tenured maturities in the market today.
What can you tell us about activities at the corporate bond market? We talk a lot about what the fiscal authorities are doing at the debt market, but let's talk about the corporate bond market, the benchmark. How much interest are we seeing, and how is that trading off across in comparison to the other side of the market?
Yeah, for the corporate bond market, we've like largely a lot of there are few interest, as we already, like I earlier mentioned, the liquidity is very thin in the market. Until probably there's a significant funding activity in the market, we will see a lot of most participants trading cautiously. However, we are hoping that by the end of this week, as we know, the holiday mostly affected trading and as well as the thin liquidity in the market. But we are looking at what's going to happen towards the end of the day. We might see some sentiments coming up in these markets, and we hope that this will pick up gradually as the week winds down.